Welcome back. It's a packed show that we have for you today. So back-to-back management. So let's bring in the management of Thangamayil Jewellery. The company reported a mixed set of fourth quarter numbers where the revenues grew for them, but we did see a decline in their margins at around 4.9%. And as a result of which, the net profit also fell by 9%. But that was the fourth quarter. We got a good update coming in from the company on Akshaya Tritiya as well. The highest ever sales, a 45% growth is what they saw. So let's talk about all of that and more. Mr. Lakshmanan, who's the CFO of the company, joins in. Thanks a lot for joining in, sir. Let's, talk about the top line first. You gave a guidance of 28% sort of growth in FY24. You've met that when it comes to your retail revenue. What's the outlook for FY25 when it comes to Akshaya Tritiya sales? And I mean, now that you have Akshaya Tritiya sales, what's the guidance?
Good afternoon, Mangalam. Thank you for the opportunity. As you said, the company had ended the financial year 23-24 at 3,827 crore rupees, an annual retail revenue growth of 28%. In terms of a volume for the last financial year, gold has performed a double-digit 11% growth, which is an exceptionally good one in terms of a volume, gold volume. And diamond has done a robust 39% year-on-year sales volume growth. As far as the current financial year 24-25 is concerned, it has started on a very strong note, very encouraging note. Akshaya Tritiya, the company has seen a year-on-year revenue growth of whopping 45%. In terms of gold sales volume for the Akshaya Tritiya, year-on-year growth rate is at 24%. Okay. The company is confident of repeating or even bettering the last year's performance in all parameters in this financial year 24-25. Things are bullish.
Okay, all right. Well, seems to be definitely bullish in terms of prices right now. Sir, you join us on a day where we have gold prices as, at record high, silver prices at 11-year highs. How does that change the dynamics for the business? Do you expect demand to probably get dented at some level simply because of the exponential rise that we've seen? Or do you expect volumes to probably sustain or be in line with your targets?
Yeah, good afternoon, Ekta. Let me start the conversation with a modified proverb. Gold is a proverbial friend indeed. Gold is a proverbial friend indeed. Gold price will continue to increase, and the people have, come to a realization stage that they have to going ahead with their buying as the wedding seasons and the festive seasons keep happening. They wait for some time, maybe a couple of months they wait, and they reconcile to themselves that the price is going to be, this is the way, and the purchases happen, and that is what is reflected in Thangamayil Jewellery as well. As I said, the last year's gold sales volume is 11%. People continue to buy. They wait for some time, but they continue to buy to meet their wedding seasons and the festive seasons. So it does not try to have much impact in terms of our sales and the people's purchase sentiments.
All right. So people continue to buy despite gold prices being elevated. What about margins? The fourth quarter, we saw the margins slip below 5%. For the full year, it was 5.5%. You had said that you're looking at margins upwards of 6%. What exactly happened out there? And would you want to tell us more about it?
Yeah. The companies had entered the financial year 23-24 at an EBITDA margin of 5.39%, setting aside the gold price variation impact. I'm talking about the operational efficiencies. The EBITDA margin has improved by 80 basis points as compared to the earlier financial year 22-23. Earlier it was 4.59 and now 5.39. Okay, but for the Q4 position, the company is confident of taking this to 6% level in the financial year 24-25, and that had been demonstrated in the Q3, which we had been closer to 6% EBITDA. So the company has been taking all the possible efforts in order to take it to the 6% direction. Like let's take the SSS. SSS is at a robust 23.49%. Non-gold composition. There is a 25% revenue growth in terms of non-gold between the two financial years. And as far as the expenses are concerned, the company, as I had mentioned in my earlier CNBC discussion as well, that the company is incurring only to the relevantly required extent, be it the salary cost or the media cost or the administrative or establishment charges. So the company is definitely, in the earlier years, the company used to have EBITDA in the levels of 4+%. Today, the company has come to closer to 5.5 at the annual level. And in one of the quarters, it has been demonstrated that we are closer to 6%. And with all these efforts, yes, the company is confident of taking it to 6% in this financial year 24-25.
Okay. Any impact on diamonds sales as well as prices because of lab-grown diamonds?
No, absolutely. Lab-grown diamond is not a concept as far as the Thangamayil Jewellery is concerned. Let's be very clear. We are talking only about the natural diamonds, and the mentioned 39% year-on-year growth is just about the natural diamonds. And then, as I had mentioned, Ekta, in my earlier discussion, that the company maintains a discipline of having diamond mailers, or it's called diamond dates, minimum one per quarter. In the last financial year, the Q4, we had even 2-3 diamond dates, and the youth appeal goes excellently well with the diamond, and the diamond continues to do wonders in the company. We don't have any issues regarding lab-grown diamond. It's a non-concept.
So I presume you are confident of taking the non-gold revenue up to 10% in FY25 and 12% in the long term, as you had earlier pointed out as well, right?
Absolutely, Mangalam. Absolutely.
So let's wrap it up then with your target on store addition, because 57 stores is where you're at the start of the previous year. You were at 53. The street would have liked you to, open more stores going forward as well. So what's your store addition target for this year?
Yeah, we started this financial year with 57 showrooms. One showroom has been opened during this 1.5 months time in the spiritual town of Rameshwaram in Tamil Nadu. So the present count is 58. The company is setting its foot in Chennai in the Q4 of FY24-25, which will be the largest flagship showroom once open. And along with this, 7 more showrooms are going to be opened during this financial year, taking the total new showrooms count to by 9, increasing it by 9 for the financial year. And as I had mentioned in my earlier interviews with CNBC, the Thangamayil Jewellery is on a calculatively aggressive expansion path. Let me word those phrases very strongly, firmly. Calculatively aggressive. Wherever we want to open the showrooms or wherever we have been operating our showrooms, Thangamayil Jewellery continues to be dominant player number 1. Probably in some cases, it could be number 2.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Thangamayil Jewellery. We'll take a short break, but more on the markets, and we'll put the focus on the F&O space and the cues from there. Stay tuned. We'll be back.